advisors to move beyond the usual piecemeal, transaction-based selling to a more integrated and comprehensive wealth and financial advisory service. He has spent 17 years as a licensed financial advisor, providing fee-based business and personal financial planning services to companies and individuals. He has also been actively involved in financial counseling. Ladies and gentlemen, please help me welcome Mr. Tay. Mr. Tay will be sharing with us financial planning for the business owners, something we all look forward to hearing from Mr. Tay.
Thank you. Am I on? Okay, very good. Very good afternoon. I consider it a great honor and privilege to take the platform in this special conference. My name is TG. Usually I introduce myself as with my initial. And very easy to remember what I'm going to share with you. I always tell my audience that if they thank God every day, they cannot forget. Okay. I know the afternoon session is one of the most challenging time for any speaker to deliver any message. But I want you to tell your neighbor next to you that the next 45 minutes, if you can catch something precious, I can assure you it's going to more than pay for the cost of this conference. Okay? Are you ready? Financial planning for business owner. Over the last 9 months or so, if there's one headline that best describes what the whole world has experienced, it is this headline: hell in Asia. And I know all of you know what has happened. Unthinkable, unimaginable things have happened. The top 5 well-known investment banks literally almost disappeared overnight. And they came up with a new currency. Have you seen this? Oh dear. Literally, when you really look at the desperate measures taken by the Federal Reserve, the US Treasury, up to now, I believe not many people are still wondering where exactly is the root of this problem. Eh? And out of this crisis, there's something that's very, very important that has been breached. And that is the broken trust. Totally shaken among the banks, even governments, and of course, as advisors, you and the clients. And what is this broken trust? In the recent report by Merrill Lynch, the World Wealth Report, okay, the spotlight on this World Wealth Report, spotlight that is in this report, it says more than a quarter of the high net worth individual clients surveyed withdrew assets from their wealth management firm or left that firm altogether in 2008, primarily due to a loss of trust and confidence. And then in our own Business Time article, this article that appeared in our own Business Time, loss of clients' trust, how this credit crunch has spawned perception gulf, and the Post find that most wealth managers underestimate the loss of this client trust, resulting in 2/3 of the sector's client base now up for grabs. So, there you are. The market is there for you to tap. Okay. It's not all doom and gloom, my friends. I'm here to bring you some good news and hope. Because I am very convicted that one of the most neglected market that financial advisors have yet to tap is the business market. Okay? And I'm sure all of you are familiar with this book by Robert Kiyosaki, Cash Flow Quadrant. I'm not going to point to the various quadrants, but I just want to highlight to you a very important statistic. You know, most of you, let's say you're on the left-hand quadrant, employee and self-employed, and the right-hand quadrant are the business owner and the investor. But note this very important statistic, okay? 80% of the world population owns 20% of the world's wealth. Some say even less than 20% on the left quadrants. But it's the right quadrant that only have 20% of the world's population, but they own 80% of the world's wealth. So where should you be focusing your target market? And this is, again, a statistic that was quite surprised myself when I found out. 103,000 SMBs, small, medium enterprises in Singapore, comprising 92% of all businesses. When I graduated from the university, I started out in a bank, in the credit department of a local bank, doing real estate financing and small, at that time was small industry financing scheme. Now it's a SMB financing. And spent 1 year in the Forex department before I moved on to an offshore bank to do private banking. And it was at this time that I was kicked out, literally kicked out of the bank. I was retrenched at the lowest point of my life, right in the midst of a financial crisis. I lost 350,000 speculating in the stock market. By June 1986, I have 2 judgment debt. By September 1986, I was given the ultimatum: if you don't pay up, we will make you a bankrupt. And you know what was the miracle? I was retrenched. And out of this retrenchment, they paid me $17,000, which they didn't have to pay me anything at all, because I was not even a confirmed officer. And so it was at that point where I felt I was pushed up to do some management consultancy, ended up doing some acquisition, takeover of companies, and then a property agency. And it was through that 3.5 years, closing a few acquisition, takeover deals, that helped me wipe off my mountain of debt. And I really thank God for that. And it was in 1990 that I met my friend, Benny. And at that time, he was sharing with me his plan to come out of a tight agency and to do broking and fee-based planning. And I was trying to figure out what exactly he was talking about. I'm a trained accountant. I learned about trust, estate planning, Company Act, Income Tax Act, what have you. And I just cannot imagine how would anybody want to pay you a fee to do the planning. Anyway, I make the decision to start out with him. Spent 3 months trying to understand this business market, because that was my background, and understand what financial planning is all about. And then I met my first client, a client that I had not seen in a bank for the last 10 years. And so we went for lunch. I started sharing with him what I'm doing now about this area of personal financial planning, estate planning, and so on. So when we went back to his office, I was so surprised when he said, okay, what are the information you need to know? And I was really literally caught unprepared. Anyway, I gathered some information, went back, did some planning, and came up after some help from my partner, Benny. I gave him a proposal for a keyman insurance. He accepted my proposal, the premium, 5 figures. Went through the checkup, everything cleared, nothing happened. And then one day he called me up, say, okay, at that time I was known as my Chinese name, Tian Guan. Say, I'm ready to take up the policy, but my father said, can you give discount? I said, oh dear. And straight away I thought I've lost this case. And I was prepared to even bear the medical costs. And I just told him politely, no, I just want to do a professional, honest job. And at that time, we were not allowed to give any discount. And I told my partner that, okay, this one I'll be prepared to bear the medical costs. And 1 week later, he called up. Can you please come and collect the check? You know what's the difference? The difference is because I offer not just to sell him a key man insurance, but I offer to do the overall planning for him, right up to the execution of his will. But that's not the end of the story. 3 years later, he came back and I sold him another policy for critical illness. And this time, he didn't even open his mouth at all to ask for a discount. 3 years later, I did another review of his case. And this is where the fact-finding comes in, because he is the favorite son of the father, and the father just passed away. Two families. And so this time when I did a review, I sold him another 3 million key man policies. And so there's a lot of quality potential business in the business market. Okay, and so I want you to open wide your ears. Hopefully you can catch something that will propel you to have a breakthrough in this market. So this is another one of my favorite case studies. When I met this client, it was 1 year after I did a talk at an association. Okay, and he said, okay, now I'm ready to see you. Can you come and talk to me? So we did some fact-finding, and this is the background of this client in his mid-60s. As you can see from the financial details, his net worth is about 100 million. Asset under management by 4 private bankers, 10 million. And I discover he has some key man insurance under one of the companies for up to 3 million. Cash in bank, 2 million. Still very active. Net income every year, average about 2 million. 4 companies owned by the family. So when you look at a case like this, if you are there to just push another product or key man insurance for that matter, what do you think are your chances? And this is where you need to know how to break in. Because after all the fact findings, to cut the story short, I ended up selling him the biggest policy I ever sold in my career. For the husband and wife, I collected an annual premium of 430,000. Thank God. And that's not the end of the story, because I went on to look at the children and the grandchildren, and in total, I collected a premium of close to 500,000 just on one family alone. That is the potential of this business market. Excuse me. So, in order to break into the business market, you need to understand the business market. What is there in the business market, so that you can speak the language of the market. And so the basic foundation that you need to know is to understand the different business structure, which I believe most of you would have an idea how it works. So I will not go into the details. And then you need to know the key. Sorry. Excuse me. Okay. You need to know the key to the business financial health. And one of the key lessons that businesses learn too late in this crisis is that of cash flow. It's not just cash, but cash flow, can I say, is king. Okay? And it's a very simple concept. I'm sure all of you understand. You know, if the cash inflow is less than the outflow, then you have a negative cash flow. But if your cash inflow is more than the outflow, you will have a positive cash flow. But in the business arena, you need to know more than just a simple negative and positive cash flow. You need to understand how the cash flow, starting from the way the business operates. If it's a manufacturing firm, for example, you start with purchases, then you purchase the raw material, and then you may enjoy credit from the suppliers, and then you put into work in progress before it comes into, together with the labor, wages and overhead, before it come into finished goods, and then you go to sell the finished goods. Okay, and so this is a big cycle, process, sales, and then from sales to trade debtors before it comes back to cash. So to appreciate the risk that a business is facing, you need to understand the different kind of cash flow for different industry. If you are to break into this market and you are to do real planning for businessmen. So for a manufacturing company, it's the kind of cash flow cycle that you have seen just now. For a trading company, again, it's a different kind of risk, especially if they are in imports and exports, LC, trust receipt, and so on. What are the risks involved? So that you can identify those risks and use one of the most powerful instruments that's in your hand, and that is insurance, to cover and cushion those risks. And so again, for the property company, it's a different ballgame altogether again. There's a lot of risk when you do a property project, okay, from the start before to the finish. And so it's important for you to understand how this cash flow. And then, of course, service company and, of course, other very specialized project. So it pays for you to really understand some of these various industry, and there's a lot of information on the internet alone for you to tap into this area, okay? And then, of course, another area for you to equip yourself, educate yourself is the type of business funding. From the equity, from the owners, right, to the loans, how they are going to use all these credits, alternative financing to fund that cash flow that you saw just now. And then, of course, suppliers' credit. And then from there, you need to understand the various types of financing structure, all the way from long-term loans to LCTR, from leases to overdraft, from hire purchase to short-term loans, and so on. And the various types of collaterals that are often used to pledge to the banks, from the mortgages to the fixed and floating charge on the company. What's the implication? Use of factoring, fixed deposit, share pledge, and even derivatives. What are the risks involved? Okay? In order to understand, in order to talk the same language and help your client, your business client, identify the risk, you need to at least have a basic knowledge of what are all these instruments and how it works. So this is another case study which I want to share with you. Met this client, businessman in the precision engineering company. And so after some fact finding, he has 3 teenage children overseas studying in the universities, net worth about 2.5 million, no personal borrowing, personal net worth 2.5 million, no personal borrowing, and net worth of the company about 1.2 million. You see, you can be talking to a businessman. Oftentimes, for a lot of advisors, when they think about financial planning for business owners, straight away what comes to mind? Keyman insurance, buy-sell agreement. Okay? So I'm trying to give you a paradigm shift to look at the way you look at the business market. Because if you just go to a businessman like this and tell them, I think you need some keyman, I think you need some buy-sell agreement to cover, in the event of loss, how your loved ones can realize your stake in the business. They have heard a lot of this already, especially the tax benefit and so on. But you need to know more than that. You need to help him identify the risks. And so in this case, when I was given the opportunity to do the planning, straight away I asked for his banking facilities. And so when I look at his banking facilities, from the overdraft to the term loan, to the LCTR, to the hire purchase loan, in total, his exposure is up to 2.7 million. Then I look at his collateral, I look at his collateral that are pledged to the bank for the facilities, from the fixed deposit, personal fixed deposit, to the factory that he's operating, an additional factory that he has, and the machineries. When you take a loan to buy a machineries, when you are forced to sell those machinery, it's not the same as the original cost. And so when I look at assuming in the situation where there is a forced sale of his so-called collaterals, as you can see, the total is 1.5 million. But his exposure just now is 2.7 million. So there is a gap. This is the risk gap. How can you help him cushion this debt, considering that the 3 children are still overseas, depending on him for the income to fund the tertiary education? And so I was able to sell him not just a key man policy, but a policy that is set aside under trust, so that whatever happens, even if he's so bankrupt, anything happen to him upon death, this money can at least see the 3 children to completion in their education. So it's very important for you to understand how the business operates. And so, when it comes to the business market, you need to move beyond the balance sheet. For a lot of people, even if you are given the balance sheet, you may not even know what are the key information to look out for. Okay, and so beyond the balance sheet, you need to know that the balance sheet may not reflect the net worth of the company. Secondly, it may not reflect the current financial health, especially the cash flow. And so you look at the financial statement, there are 3 types of cash flow that you need to watch out for. And then, of course, the shareholding structure is also very important. Who are the parties involved? That will play a part also in the way you are going to propose to him what kind of solutions to his problems. And then the integrity and caliber of the management. And, of course, something that you cannot miss. And that is your full borrowing exposure of the business. And the so-called the soft facts that you need to have, contingent liabilities. Remember, we are in the business of helping our client manage risk. And so you need to look out for all this. Then you can hit it where they need it most. Personal guarantee given usually for facility, and especially in cases of husband and wife team. Joint and several guarantee given for the business banking facilities. And of course, professional liabilities. Engineers, architects, they almost have unlimited professional liabilities. And then, of course, directors' liabilities. So these are areas where you can find ways to see whether they are well covered. So the keys to unlock the business market. In order to break into the business market, as has happened over the last 6 to 9 months, you need to appreciate the risks that the businesses are facing. The very fact that even giant banks like Citibank, can collapse overnight is because they didn't see that kind of risk, especially the cash flow risk. And so when you look at the risk profile of the business in the light of what has happened in the crisis, and especially, this is a hot tip for you to take note, especially in the light of the H1N1 virus. There's a lot of focus and interest now on handling the various kinds of risks, from the strategic risk to the operational risk to the compliance risk, and of course, the financial risk. Even a simple situation, downtime where the company office is flooded, can affect the business. When I attended recently a seminar, it's called the BCM seminar. And this is the hot tip. I want you to take down this number. It's not 4 digits, so it's not for 4D. SS540. This is Singapore Standard 540. You have heard of ISO 9000, 9001, and so on, right? But I'm sure for a lot of you, this is something new. SS540. You know what is SS540? The BCM, Business Continuity Management. And the buzzword for businesses now is this: how to be certified that you are BCM ready. And so, if you want to use this as a door opener to the business market, then you need to find out more about this area, right? There are plenty of information on the internet for you. But this is the hot tip. Okay, take note. Even as I attend the seminar, as they were talking about the various kinds of risks, from terrorism to the H1N1 virus to computer downtime, the whole thing crash, and so on. Do you know what is missing? The two elements that is missing, that is not in this certification under SS540. That is the one on financial risk and the risk of the premature death of the owner. Okay? I call this the two dreaded D's. Debt and death. And this is how you can use this to go into the market. See, for me, when I think about the business market, I don't think of just key man and buy sell. I go in with the intention to offer my total planning services. And these two areas will be the one that you are most equipped to handle. Debt and debt. Just now we saw how the case study about the various banking facilities, the exposure that he has. So what can you do to help him cushion this risk in the event of the unexpected premature death of the owner? In fact, I just appeared on Talking Point and they were asking me, because Michael Jackson died with 400 million in debt. So how can you help those who die with debts? What are the things that they can do? See, it's not just putting a will in place. Yes, that's very important. But more than that, there's a need for a more comprehensive planning. Not just the earning capacity of the main breadwinner, but also the cash flow, to make sure that the cash will continue to flow. Where the man at work, the money at work must replace man at work. It's again back to basic. I understand you've been hearing a lot about this, back to basic. That you have in your hand one of the most powerful instruments, if not the only instrument, that you can use to help a businessman cushion this risk. And that is to guarantee cash at a time when it needs it most. All right? Debt and death. And if you have been following the news, there are a lot of companies, even listed companies, that are potential clients that are in financial trouble because of their borrowings, their loans. Okay? And so, for these people, if anything were to happen to them during this period, when they are around, I mean, it's still okay, they can still fight the battle until the end. But if they are not around, what happened? How can you use this unique instrument to provide the solution? Okay? So, back to, again, basic. How do you see yourself? Do you see yourself continuing running every day, chasing for cases, just product, transaction? Or do you see yourself as somebody who will go in and offer total, comprehensive financial advice to your client? Whether it's from the personal side, as you move in from the personal side to offer these planning services, if they are in business, you will have to involve the business side of planning. But if you move in from the business side, again, your planning will not be complete if you don't cover the personal side. See? So how do you see yourself? That's very important. And then secondly, how do your clients see you? Do your clients see you as one offering just unit trust investment, or just insurance, or more than that? And then thirdly, how can you help your clients see you for who you want to be? And so that requires a paradigm change. The way you approach your prospects and your potential clients. And so total financial planning, when we talk about total financial planning, we are talking about a process. How you can help your client design a comprehensive and well-coordinated plan for the creation, conservation, and disposition of your assets to minimize the 3 C's: confusion, conflict, and cost for your loved ones. Okay? And so when we talk about financial planning for business owner, it must begin with you investing time to understand what the business market is all about. Speaking the language of the market, then you can have that connection. And there are many, many avenues for you to do that. And then you need to go beyond the financial statement. You need to know what are the questions that you can ask to get your client to open up. It is not just a story of numbers, but more importantly, it's through a number of stories that you're going to get behind the facts and the figures. Okay, and so for those cases that I've shown you, actually, it's the critical information. The largest case that I closed, when I went into the fact finding, you know what's one stuck, missing element in his overall plan. Notwithstanding the fact that he has all his professionals around him, he's worth so much. You know what's missing? He doesn't even have a will in place. So that was my door opener to move in. Okay? And then, of course, more than that, I discovered that for all the companies that he has, he's still exposed, net worth so much, but he's still exposed to some liabilities. And of course, at that time, there was also estate duty liability. And that's why I was able to sell him another 5 million whole life policy. Okay? Last but not least, if you approach it from the risk management approach, cash flow, and then the business succession side of the planning, then you can meet your clients at the point of his need. Okay? Providing the right solution, right product to meet, solution to meet his needs. Okay, so for this, actually, I have worked out a 3-day course to help financial advisors like you, to how to break into this market on this whole subject of financial planning for business owner. And the good news is I've cleared this course with MAS, and now they are very generous. They are prepared to fund up to 70% of the course fee. Okay, and more than that, I believe it's not just attending another course. I mean, there's so much education that you have gone through. I want to offer not just training, but hand-holding coaching. Right, so if you're interested to really consider this quality potential market, you can talk to me later on. Okay? God bless you.
To show Mr. Tay our appreciation, can I invite Council Member Eric Poon to present a memento? Thank you, Eric, and